Very good afternoon, good morning. Welcome to HYCM's workshop with myself, Giles Coghlan. I'm just going to make sure I've got the right screen for you here. There's a bit of a chase as they all go around the different screens. There we go, super. If you can let me know that sound and voice are coming through okay, that would be great. Oh, thank you, Mihai. That's super. Just as folks are signing in, please remember that as we're looking at different entries, exits, different instruments, this is not trading advice. This is simply looking at someone with a professional trading background, seeing how I'm going about trading the markets and the kind of decision-making process that I'm looking at. Please excuse my cat who's saying hello to us. And those of you who attend regularly know how this works. And today we're looking at the Euro and UK PMI prints that are at the end of the week. I'm going to show you why these are potentially interesting data points. We could see a divergence between Europe and the UK, and that could present a potential opportunity in the Euro-Pound pair. I'm also going to run through with you an opportunity that presented itself today in the Euro-Pound. I ended up taking a Euro-Pound short, and I'm going to run through that with you and why there's probably a Euro-Pound sell bias still in place at the moment. And then you'll just see how you go about pairing a weak currency with a strong currency. Remember, when we're making trading decisions, we always want to trade weakness against strength. And that's the key principle of trading. You want a strong currency against a weak currency, and then you get a more higher probability chance of a currency moving into your desired direction. Okay, without further ado, let's get stuck into it, and I'll show you that Euro-Pound sell bias that emerged earlier in the session. So let's just make sure I got that. Okay, so earlier in the session we saw the euro drop against the pound. Now this was on the UK inflation print that came out higher than the market was expecting. If we just go to the data releases, what we can see is, you see core inflation, came in at 6.2%, which is above the economist projection of 6%. Now, it was up towards the high end of estimates at 6.2, with the highest being 6.3%, so that's high. And remember, investors are concerned about the core in countries being stickier than central banks maybe originally thought. So a core inflation print that's high is more worrying than a headline inflation print that's high, though both are more concerning. And remember the logic that when inflation is rising, it means the central banks will need to do more to tackle inflation, and the tools they have is really to hike interest rates. That's the major tool. So look at the headline, core 6.2%, month on month headline 0.8%, in line with a high estimate. Headline, look, back in double digits. Economists projected it to fall into single digit inflation, but it remains firm, 10.1% in double digit inflation, and the month on month core up at the higher end, 0.9%. So basically a sea of green. Yes, the PPI input year on year fell significantly lower. And that's a good sign for inflation further down the line. It shows that there's, deflationary forces showing up for producers. This is the producer price input, but the prior was revised higher, and then the core output was 8.5%, and the prior was revised lower. So a bit, those two areas were the only bit of deflationary forces we saw. The rest of it was inflationary. And if we do look at like inflation, look at the headline inflation, 10.4, was the prior reading. We're staying in double digits, and 6.2, we're staying in double digits. Yeah, not double digit, we're staying sticky, and the headline print was coming in at that 6.2 area. So that's for March reading. So looking at February and January, look, you've got 6.3 for November, 6.3 for December, 5.8 for January, and 6.2 for Feb, 6.3 now for March. It's just showing inflation is stickier. So as a result of that, there was something else as well that was concerning for markets, which the previous day, you see the earnings were much higher than expected, 6.6%. And you see how it's above market's maximum expectations? And the average earnings 5.9% above market's maximum expectations. And you see how the prior is revised higher? So this is really concerning because it shows this wage price spiral could be about to bite. And I was sending out, a number of notes for journalists this morning. One note that will go to a few different journalists, just saying this is the worry that the wage price spiral is going to bite. And remember, if you have higher wage pressure, that's inflationary. So higher wages is an inflationary force, which means central banks will need to do more to bring it down. So when you put that all together, that was worrying on Tuesday, and this has been concerning today. So the Bank of England now has a big headache because they've got inflation, which is really flaring up. And it's not going down as quickly as they had intimated at the last central bank meeting. So let's start putting this together. So that meant that there's been a rapid repricing in short-term interest rate markets. And you see from the current level has gone up significantly compared to a week ago. And you see how the current level has gone up today, 4 basis points, expected to rise. Okay, so you can see from yesterday went up 2 basis points, and today has gone up 4 basis points. So we've gone up about 6 basis points expectations that's expected to come up in upcoming meetings over the last 2 days. And if you look how that's translated into the interest rate curve, it means that Bank of England's interest rates are currently at 4.25%. They're now expected to rise up to around just under 5% in November. So that is potentially 2 more interest rate hikes that's now expected from short-term interest rates for the Bank of England. And prior to the meeting, I remember looking at this print expectations. They had about 79, I think 70% chance of a 25 basis point rate hike. It's now got up to 97%. So that is why the pound has been gaining value this morning, right? And so I traded this, with price moved up into that pivot point. I took a short and traded that down to this S2 pivot point. I took profit first of all on that S1, and then secondly as we went through that S2. So I took profit on those couple of falls. So in the near term, this does increase expectations. The Bank of England has to be more aggressive. That is pound positive. There hasn't been any particular news out for the euro. So that means that any sort of pullback on the euro pound could still be considered suitable for shorting. Now, let's just have I'm going to have a look to see where we're going. Now, we don't want to short from the bottom levels, you know what I mean? We don't want to short from down these kinds of levels, but that is that's quite bearish there. We're signing a little bit of support of that 100-200 exponential moving average from a longer term position. We've got, that's really a false break of that very near term trend line, so that's not very good. But if that breaks that level there, you can see that being another, a decent flush lower. Momentum is certainly to the downside, but looking at ways potentially to trade this, tricky. I think the best opportunity here would come from any retracement back up to that pivot point. I think that's what I would be looking for from an intraday basis. So any moves back up to that daily pivot point is still suitable for shorting. Now, you could have shorted from that S1 pivot point, but I would prefer a deeper pullback. And then stops could be placed just above that R2 pivot. This would only be an intraday potential trade, and if your entry is not triggered by the end of the day, then I wouldn't leave it holding, because there's a lot of different movers in the market right now, and then I'll show you what then to look forward to on Friday's print. But a sell bias from back up into these 100, 200 exponential moving average. We've got this near-term resistance level. So back up to 88.20 could be considered suitable for shorting, with stops just above that R2. And as I said, I'll only hold it potentially for the day. But that would be on the basis that we're expecting the pound to continue to gain against the euro. Now, if we go over to Friday, there's a couple of things. So first of all, we can see that the UK has been quite sensitive to incoming data. Now, on Friday, we've got a series of European PMIs coming out, as well as the UK PMIs coming out. Now, a couple of things to note. If you look down this list, what you'll see is the manufacturing and the services PMIs are quite different to each other. So look at the French manufacturing PMI. It's in contractionary territory below 50. Services is expansionary above 50. Germany, services expansionary, manufacturing contractionary. Eurozone exactly the same. UK, manufacturing contractionary, services expansionary. So we've been seeing this divergence, and I'll just show you this, between services PMI and manufacturing PMI. So if you look at the manufacturing PMI that we've had for the UK, definitely contractionary basis. Then if we compare country by country, look, you'll see that a lot of big countries have got contractionary PMI prints. Germany, 44.7. The Netherlands, 46.4. France, 47.3. Whole Euro area, 47.3. UK, 47.9. New Zealand, 48.1. US, 49.2. Right? The world as a whole, look, 49.6. So the general theme is that PMI prints are lower around the world. Post-COVID, the manufacturing PMIs have been significantly lower and falling on global recessionary fears and falling demand. Well, that demand has really been replaced with services demand. And then if you take a look now at services PMI for the UK, that was the manufacturing PMI. Now look at services. You see, it's an expansionary territory, much more robust. And if you take a look at services PMI generally, look, US in expansionary territory, UK in expansionary territory, France, Germany, New Zealand, Euro area, 55, Japan, 55, decent expansionary services PMI across all those major countries. So what that means is as we come to Friday's data point, the first point to note is that divergence between the services and manufacturing PMI. Now, what that means, right? That means is that if we see manufacturing PMIs come up significantly higher, that will be seen as very positive. So services PMI coming in strong, that's kind of just expected. But the manufacturing PMI, if that comes in strong, that will be more positive. Do you see? Because it shows that that country is getting ahead in relation to others. So if you look at now, a couple of things to note about this data. When it's released piecemeal. So you have the French, the German, the Eurozone. So the way I trade this, you never just hang around, come to the desk at 9 o'clock, because most of the move is already done by the time you get to 9 o'clock. France and Germany are two of the biggest contributors to the Eurozone. Germany is the single biggest contributor to the Eurozone. So traders start moving and making their positions as the French and German data comes in. So what they'll do is they'll look how this data goes. So at the moment, we have a sell bias for the euro pound. And the reason we have a sell bias for the euro pound is because of the inflationary pressures that we've seen in the UK. Remember, those high wages, high inflation, that should be supportive for the pound. So if this comes in very weak, and when I say very weak, if we see manufacturing PMI coming in but sub 46.8, and then the services coming in below 51, that will be crucial. So if services come in below 51 and French data comes in below 46.8, expect the euro pound to sell off. Then it's 15 minutes, you wait for the German data to come in. Now what happens is if the German data contradicts the French data, you can see the moves reverse. If the German data enhances the French data, you see the moves are enhanced. So if you get, we get there later and you see PMI comes in, say the services comes in sub 51, manufacturing comes in sub 44.5, then you expect the euro pound to sell off very, very sharply. Once you've had the French and German data in, the Eurozone data becomes boring because you've already got the two biggest numbers, and so the Eurozone data tends to follow the French and German data. That's what's going on there. But where it gets interesting is then we've got the UK data coming out half an hour later. And what I'm looking for on Friday is a divergence between the two. I want to see if the French data is very bad, but the UK data is good, then you could expect euro pound downside. So if this comes in, very poor, but then we see a beat from the UK data. So if that comes in above 53.2 and above 49.4, then you'd expect the euro pound to sell off rapidly. So what I'm looking for is a divergence between these two. Now, if we got the other scenario, say the Eurozone data came in really strong, I wouldn't look to pair it with the pound. Why? Because there's a lot of bullish pressure for the pound. We've had those strong wages, right, that came out on Tuesday. We've had that high inflation that's come out today. That's all increased expectations of the Bank of England hiking interest rates. The pound should be supported into Friday. So if we got to Friday and we saw a big kind of beat in the European data, say it came in really strong, I wouldn't look to trade euro pound upside. Instead, I'd probably look at something like the euro US dollar. So I'd look at maybe euro US dollar longs, or depending if there was another weak currency for the day. So if you don't know what to do, what you can do sometimes, and this is a nice sort of simple answer, is just go and take a look at the currencies at, just before the print and see which is the weakest or the strongest. So today you can see at the moment, like the Canadian dollar, the Japanese yen are the weakest currencies. So that would mean if, there was a decision, say this data point was going to be released right now, and you saw, and the euro came in very high, and it's a strong print, you're expecting the euro to gain, I'd pair it against a weak currency, like the yen or the CAD, and CAD's dropping obviously with oil prices falling. So maybe euro CAD or euro yen. But if this data is very, very poor, then I'd trade euro pound short because I'm expecting bullish pressure to stay in the pound, and then we've got that UK data coming out later. So that's the way that I'll be looking at trading these PMIs on Friday. Now, coming up the next week, we've got some very important data. We've got the core PCE print next week, which is the Fed's preferred measure of inflation on the Friday. So that could be a real big mover for stocks as we head into the month end. A lot of people are saying that how stretched the stock market is now and expecting some kind of pullback. Fed's meeting early May, 3rd of May. So we're coming to a real crunch time at the moment for markets. But in terms of, short-term calendar events, this is the next one that's very much in my focus. Bit of a quiet day tomorrow, and then Friday we've got those PMIs. So is everyone clear on that in terms of expectations? I hope that makes sort of sense to you. You can see the pound gain today on high earnings, high inflation. Remember, if earnings are high, that's seen as inflationary. If earnings are low, that's seen as disinflationary. Okay. Don't forget, I am back or due to be back on Monday for the week ahead live market analysis. It gets interesting again next week. So there's quite a few little interesting events. So the Bank of Japan meeting on Friday, core PCE next Friday, and we've got Australian inflation data out next week. So we may see some moves, and I'm expecting a bit of a flush one way or the other as we come into the end of the month. Okay, folks, I think everyone's clear. Haven't got any questions. I'll just check the chat box. Okay, folks. Well, thank you all very much for attending. Good to see you. Good to see some great, good names here today. Horatio, good to see you. Johan, Kingsley, Mihal, very good. Eamon, good to have you. Eddie. So thanks all for turning up. Keep your eye on the euro pound, and remember that intraday sell bias. As long as the market conditions remain, you would typically expect the euro pound to find selling if we move back up to that pivot point, and then the obvious target will be into that S2 pivot point and stops just running above that R2. But I wouldn't hold it at all. It would just be an intraday outlook, and I said I've sort of made my trades on that, but I would consider re-entering back up at that pivot point. Okay, folks, take care and enjoy the rest of your day. Thanks, everyone. Now, goodbye.